Marginal surprise. I wouldn't say it's huge surprise. In fact, we have been debating this for a while that the Fed actually should be looking at taking out some of the emergency measures. But from a market positioning perspective, I think the base case was that Fed is not going to do anything for a while. The June FOMC was supposed to be completely a non-event, no news kind of FOMC. So the shift in terms of the Fed reaction function to some extent, obviously the dot plots and the potential tightening and the tapering discussion, it did take the market by surprise. And you've seen that in the flattening of the curve and some of the introduction of the vol back into the markets.
Yes, and as you mentioned, I mean, now Jackson Hole could be a non-event, given that it seems the Fed kind of brought forward what many expected them to do at Jackson Hole. So what do you want to do in your portfolio, bearing that in mind?
So I think the key is overall taking a little more cautious view in the near term, as I said, what the Fed has done with the introduction of vol in the front end of the curve, it brings back the volatility and some of the positionings. So all the discussion and debate we had in terms of positioning on the reflation trades, I don't think they go away, but some of that unwind happens. The US dollar positioning, rates positioning, we are reviewing all of that. So we have gone from um, I would say modest short dollar to maybe closer to neutral or moving towards that, taking a more symmetric two-way risk from here. And in rates market, again, there, I think you see some level of differentiation between Asia and the US. But clearly, I do think the market cleanup or the unwind of the positioning is happening.